Welcome to the #InvestThis podcast, where the secrets for real estate investing are revealed. Now, here's your host, Scott Bauer.
Welcome, everybody. This is Scott Bauer, the host of the #InvestThis podcast, and I'm coming to you today live because it's a little bit different. This is not your typical podcast that at least we've had so far. This is not interview based. The reason for the podcast today is that I just closed on a 120 unit apartment complex, and I'm really excited. I want to tell you all about it. I want to say why apartments are such an amazing investment, and really, really excited just to give you the lowdown on it. So why don't we go ahead and get into it? First and foremost, this property was bought outside of where I'm at. It was bought outside of Phoenix. It was actually bought in the Midwest, and I'll go into why that is and why it makes so much more sense. But let's just get started with it. We bought it for about $4 million. It's a 120 unit apartment complex. It's at 75% occupancy when we bought it. And which is a little bit low on occupancy, which is actually a good thing for us because it'll be pretty simple to bring that up to speed or up to being stabilized. We have about a renovation budget of about $725,000, which is really, really good. So you might be wondering, well, how can you do that? How can you invest in an apartment complex and buy these units when you don't live there? And the reason I can do that is because of my team, the people that I'm surrounded by, right? You don't always have to be the one that swings the hammer, especially in multifamily syndication or multifamily when you're buying apartment buildings. It's a team sport. So you got to have other people involved, which we do. Which is really, really exciting. There is an asset manager in place. There is a general partner in place that's running the show. There's a project manager for all of the renovations, and that $725,000 renovation budget that we had. We also have a property management company, of course. So the good news about the team is that they all have experience in their right spot. You have to make sure that the property is going to run as anticipated, and we're going to renovate it as we were supposed to in a timely manner, and staying under budget and making sure that everything's done correctly. So I want to make sure we have a good project manager, making sure that's getting done right. A good asset manager that is experienced in that field. Our asset manager, and I'm not going to say any names, but he already owns another 108 units over in that in that market. So very, very well versed in the area. Property management is also super, super important. Somebody that knows what they're doing in apartments, and we feel is a good partner for us. So having all those key people involved is important. And our management company actually has 2,700 apartment units and 950 mobile home pads in 4 different states. So, that's also a good thing. Now, another benefit and why I feel comfortable in this investment, and I'll get you into the numbers here shortly, but the partners involved here also own another 84 units just around the corner. So, they're already very familiar with the market itself, what it can bring as far as our revenue and what they can charge for rents and what it looks like. And so anyways, feel very, very comfortable about this deal. Now, it's 120 units. 60 of the units have already been renovated. So, half the work has already been done, and 60 of the units still need to be renovated. We're going to put new kitchen, new fixtures, new appliances, luxury vinyl plank flooring, new landscaping, et cetera. And so at first, what we're going to do, it's probably going to take the first 12 to 16 months or so, is go in and renovate all the units. All of the vacant units are going to be renovated first. The exterior renovation and hallways are going to be done first. And then as leases expire, then, we'll renovate the units as the leases expire. And eventually within that 12 to 18 month period, bring the occupancy up to 85% or better, which is a stabilized asset at that point. If you're a tenant who's in a non-renovated unit, then you have the opportunity to move to a renovated unit, and of course, your rent's going to go up. Now, a very cool part about the financing on this deal is that we got some seller financing on it, and most of the purchase price of the property is being seller financed at 5% interest for the first year, and then 6% interest in year 2. No prepayment penalties at all, or loan fees. And if we have to, which very, very unlikely that we would, we can go for a third year of seller financing for a 1% fee and 8% interest only. So pretty exciting, really. Very, very exciting. Now, a lot of due diligence was done on the numbers to make sure that the numbers worked out correctly. Like I said, we were buying the property at 75% occupancy. The market occupancy in this area is 95%. So, we're very excited about the fact that that's the case. It's not going to take a lot for us to get up to that. Now, why I like this market in the Midwest is for a few different reasons. Number one, whenever you're looking for a market to invest in, you don't want to go to a market where there's one industry that runs, has all of the GDP in that area, or, has all of the, one market that runs the show, what I like to say. Meaning that, if every job in that one market is all in medical and something happens in the medical field where now all of a sudden medical goes down for whatever reason, then that all your jobs are going to leave that area. And so you don't want to have that. And this particular area or market that we're in is very, very diverse. Two of the largest industries are healthcare and technology. And together, they only make up 15% of the overall, jobs market, which is very, very good. That means that they're very diverse, and there is little concern. They also have a very low unemployment rate, 3.4%. Tenants are typically paying an average of 24% of their income to the rent, which is very, very low in other areas. I mean, big markets like the coastal states, New York, Florida, California, these areas, people are paying, 40, 60% of their income just to rent. And so, we know that this is a very safe environment. Even if the markets fluctuate, it doesn't really matter. We haven't, I'm not concerned about people having to pay too much for their rent. So there is also in this particular area an urban growth boundary, meaning that there's a boundary where they can grow out to, and then they have to stop, meaning that they're just going to have to build, on the inland and continue. Not inland, but they're going to have to basically stay within this boundary to continue to grow, which is going to be very good because it's just going to increase population in this one area. It's not going to be urban sprawl, so to speak. So let's kind of go into the investment itself and why I'm so excited about it, and just apartments in general. So for this one, what we're doing, we're paying a 8% preferred return to our investors. So if you're going to invest, your money into a deal like this with us, and let's use $100,000 investment criteria. So if you're going to invest $100,000 in this deal, you're going to get an 8% preferred return, which what that means is that the first 8% of profit that the property makes goes directly to the limited partners who are investing their money. So very rare for other places where you're going to get an 8% return. And this is a net return, right? I mean, you don't have costly fees that you have to pay to your financial institution. And this isn't a volatile market. I mean, it's 8%. That's what you're going to get is 8%, which is awesome. It's fantastic. Not only that, but you can go and you can feel it. You can touch it. You can see it. You can see the renovations as they happen. And ultimately, you can see the rent growth, because the way that a commercial property is, and that's including apartment buildings, the way that they are valued is based on the income that they produce. So naturally, as you increase the rents, that means you increase the value of the property, which is really, really exciting. There's also some, I'm not going to say that it's recession proof, because nothing is, but there's some recession resistance. So let's say in the 2008, 2009 crash, the Great Recession that we had, or any recession, anytime that there's a market change where the markets go down, if you have a large apartment complex, not everybody's moving out at one time, right? People are actually going to flee to these apartments. So that'll further drive rents up. And if they can't go up, well, they'll at least stay steady. And so as long as you're buying these things in the right way, your risk of them just going down and you losing all your money is very, very slim, especially if you're in an up and coming growth area that, has a diverse variation of jobs. And it's super exciting. So anyways, the first 8% of profit that the property produces goes directly to the limited partners. So of your $100,000, you're going to make $8,000 per year. And this is a 3 to 5 year play, meaning that we're going to hold on to this property and renovate it and get it up to par for 3 to 5 years. And I'm going to go ahead and say 5 years. And the reason why is because the first year we fix the building. So we bring it up to speed in the sense of we're going to renovate the units in the first year. We're going to get tenants in there and we're going to maximize, or we're going to get the property up to a stabilized status, meaning 85% in economic occupancy or higher. And economic occupancy means people that are paying. Okay. So that's in year one. In year two, we're going to fix the tenants. So tenants that aren't paying, we're going to make sure that these new units that we've renovated have tenants in them that are paying and that are, good quality tenants. And then for years 3, 4, and 5, we're going to maximize operations. And so remember when I told you that there's an 8% preferred return? Well, that's just the first 8% of profit that goes back to those investors. Everything above that in profit that we make is split 70% to 30%, 70% to the limited partners and 30% to the general partners. And maybe I should have backed up a little bit. So a general partner is the one who's putting this all together. Okay. This is the people that are running. This is the person that put the deal together, that is organizing everything, making sure that the asset management's on point, making sure that the project manager is on point, making sure that all these pieces are put together to make this thing operate efficiently and operationally be, in making money, so to speak. I mean, that's what it is, so that it's operating as a efficient apartment complex. And so the general partner is who puts all this together. And after the first 8% in profit that this property makes, the rest of everything above that is split 70-30, 70% going to the limited partners. So that'd be you if you put up your $100,000, and 30% goes to the general partners. Okay. And so this takes it all the way out to year 5. And so then on year 5, what happens is when we go to sell this asset, one, it's going to be stabilized, meaning that it's going to be at above 85% in economic occupancy. All the units are going to be renovated. All the kinks will be worked out in management so that the property is running efficiently. And ultimately, it's making money as it should, because every apartment building out there is just a little business but it's where people live. And so once it is operating efficiently and you have the units renovated and you have the property and economically stabilized and you have people paying rent and you have your rents maximized, to market rent and making sure that it's everybody's paying as they should. Now all of a sudden you have a sellable asset. So if we're buying this property and we're buying it for $4 million, I believe we're buying at let me tell you what the cap rate is. Oh, hold on one second here. It's fantastic. Yeah, so we're basically buying at a let me see. I think we're buying it at 7.5 cap. Anyways, when we go to sell the property, it's going to be worth a lot more money, and we're going to be able to sell it for a lot more than what we bought it for. Actually, I want to see what we were hoping. Oh, that's right. Okay, so we're buying at a 7.25% cap, and we're actually going to be exiting at an 8%. We're assuming an 8% cap rate. So, and we're going to be selling it for quite a bit more than our $4 million. Probably, this is obviously a projection, but somewhere in the $7 to $8 million range is where we'll be selling it. So, back to what the investor gets, you get your original 8% that you get every single year. So if you make $100,000 investment into this deal, then every year you're going to get $8,000 on your $100,000. Okay. And then when we go to sell it, the profits are split 70-30, 70% to the limited partners and 30% to the general partners. And so you're creating massive wealth, and really excited to be part of this deal, and really excited to get the first one out of the way, so to speak, because this is something that I'm focused on very heavily from here on, and really excited with what apartments can do for you as an investor. What they can do, they change lives, they change areas, right? Especially the types of properties that we buy or that I'm buying. They're B and C class properties. These are working class people. And they're great opportunities. We get to change communities. If we go in there and we renovate units or we buy a building and renovate it, make it nicer, ultimately that's going to be a better place to live for people. And, providing amenities for people that they really like and really want is super, super important. So I just wanted to go over a little bit of why I'm so excited about this deal, why I'm so excited about, being part of it, and really excited about what just apartment investing can do for us as an investor. It's phenomenal. It is phenomenal. I know I was just this last meeting this last week, I was in San Diego at the Kahuna Boardroom, which is an event that a good friend of mine puts on, or just started putting on, and it really it's all about multifamily syndication and why multifamily properties are such good investments. And I knew it before. Obviously my forte has really been in single family up to this point, but I've wanted to buy apartments for a long time, and now I'm really starting to do so because it really makes sense for everybody involved. And really, the bigger the property, the better. And these properties that I'm looking at, this was 120 units that I'm talking about that we just closed on. And here in the future, I'm going to be investing in large apartment buildings. Really the bigger, the better. The more units that there are, the more economic it is. It makes more sense. You want to have on-site property management. You want to have on-site maintenance. and really just the economics. It's economies of scale is what it is. So really, really excited. If any of you out there that are listening to this podcast want to know more about how to get involved with investing in apartment buildings, or if you want to know how to get involved, just want to know more about the investment process, or know about how investment or how apartments work, please reach out to me. Go to Scott, send me an email, Scott.Bauer@HBSBHoldings.com. And, I'll tell you about what other projects I'm working on, or anything else you'd want to know about the apartment investment space. And, stay tuned, because we have a couple other deals I'm working on right now as well. And really, really excited about it. So hope this was a good overview. I feel like I maybe just rambled for a little bit, but I'm super excited, and excited to show everybody and tell everybody out there about what these opportunities look like, and excited to go down this path. So like I said, if you want to know more, want to chat about it, anything you want to do, go ahead, send me an email. Let's set up a time, and I look forward to talking with you real soon. All right, thanks, guys.
Make sure to like, subscribe, and share this podcast to help us spread the word. Go ahead and reach out to Scott Bauer on all the social media outlets for suggestions on topics and guests for the show. And check out investthispodcast.com for more secrets and resources to achieve real success in real estate.